trading bell, my heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound.
I always think I'm going to stop the damn thing. I don't know if, I guess that's the whole screen. Yeah, that's the whole screen. At least that's what I see as the whole screen. I don't know. Okay, so what do I have today? China stocks, they were going crazy yesterday. All of the miners and materials were going nuts. Interesting Costco with earnings. IBIT with options. And you know what? I'm going to move this up here because we have two new MicroStrategy leveraged ETFs. Amazon has historically never been cheaper, just like NVIDIA. NVIDIA done being held down by sales. Roblox has quietly gone nuts. CAN, C-A-N, is a sugar ETF that just seems to have popped. There's an article on ServiceNow how there was a raid. Tesla's approaching resistance. Amazon close to the price where Bezos will sell it. Let's make sure I put that in up here with the Amazon stuff. Netflix soared is above that 700. Qualcomm seems to be putting in a nice floor. So I did some research on stocks for folks this morning. But we're going to start with some scans. So we'll go to the market scanner here. Market scanner. Boom. Where's the scanner? There it is. Walmart gets an entry. I think this had an entry, if I'm not mistaken. Yeah, this is just another bullish move up. Morning, Mark. That's just another bullish move up. God, that stock just won't stop. Can't stop, won't stop. Isn't that something? Let's start out with. I'm gonna. Carolyn Ellison got sentenced yesterday, and in the same Sam Bankman Fried. UNH, I was thinking about bringing up UNH. It's an interesting one because you're heading into earnings and you're going down. That's what it did last time. Just at a leg up. And then you look at a weekly chart of this one, and it doesn't seem to be stretched, but the valuation might be a little bit stretched. Now, Lilly, just buy it under $900. I mean, that's a no-brainer. Covered call ETFs. Nothing in there. Energy names. I got to update a lot of stuff too at some point in time. Leveraged ETFs. This is DRUP. Disruptors. We brought that up before. Low cost Vanguard. I think most of this stuff you're in, and that's why you're not getting entries in the scans. Watch list. Terex Corporation. Interesting chart. If you were to put a line in here and just go to these previous highs, the 2021 highs. I mean, look at how clear that line of, hey, 2024 right now, and that goes back to 23 years. 3 years. It doesn't necessarily pose a huge opportunity, but from a chart standpoint, you go buy at that 50 level and maybe pop to 60, 53, pop to 60. Interesting play to play. I don't know anything about this company, but ARM is an interesting one as well, because I do think that put in that. Oh, let me put in these two, TEX and ARM. If you get selling pressure, yes. I've said it before that I think at 120 you get to see some resistance and some selling up there. But morning, Mike. But what valuation? Again, it's market pressure. I think that's it. The revenues, it's cheaper than it's ever been. So, I think Tom's trying to be Tom, which is, hey, let me shock the world so I can get on TV, because I've got nothing else to say right now, because there's nothing else, nothing exciting going on in the market. I already said that the IWM was going to be a triple in the month of August. Tom, maybe sit that one out. Adobe. Jim Labenthal yesterday, he bought a bunch of Adobe, he said. I like him. He's the guy who I started trading Cleveland Cliffs with, because he was so big on it. Ooh, now that is a chart that, this is Electronic Arts. I mean, look at how it's pulling back into this channel. This goes back to 2020. It's trading in that channel. O'Reilly. No, I didn't stutter. You look at that one, just kind of putting in that top. It can't get out of its own way. You look at a weekly, it's still going. But that 1160, I have SMCI just gotten the one thing I have on SMCI is they got the quant raised it from a hold to a buy. So other than that, I don't know that there's a lot out there, but it's, again, the headline was Loop Capital slashes target, and it went from 1,500 to 1,000. which AI platforms? Because it's kind of, Brian, that's kind of a generalization. Because like Fidelity holds their I don't think you can connect Trendspider to Fidelity to create a bot. So it would determine, which brokerage you have. Fidelity is pretty tight to the vest about allowing outside stuff in. And there's a big reason for that is, and to be perfectly honest with you, that's the brokerage I want. So I got a bunch of people asking me, I'm not going to put this one in. Palantir, I mean, let me go back to, I've done the scans. So what you saw me do, by the way, was just the scans. That's, you can have this, you can set up Trendspider to email you the scans of what I just did. The only reason that I do that is to show people, yeah, you can scan every day if you want. But you can have it automatically. That's why Trendspider is so good. So Palantir here, you got in at 34. It's kind of button hooking here, a little bit, 36. Still haven't lost confirmation in pre-market. It's 36.75. I don't think you'll see 20 again. You probably will see 20s, but I do think you go back to the all-time highs of 45 prior to you seeing 20. And I don't know that you'll see $20 again. $20, I mean, that would be a pretty big freaking move. From a valuation standpoint, probably makes sense. But from a momentum standpoint, the market would have to crash for something like that to happen. You would have to have a lot of people start selling in order for that to happen. But am I paying 103 times forward earnings? No. Am I paying 4.33 on a PEG ratio? No. Again, that's personal preference. I just, for me, I've been one that has, I'll put my money somewhere else. I do own Palantir through ETFs. So, but that momentum, you can't argue with it. 52% in 3 months, 6 months, 52%, 9 months, 111. 1 year, you're up 161%. That's crazy. Now you go back to 3 years, you're only up 29%. You're up with the S&P over 3 years. 5 years, it hasn't even been out 5 years, but I think there's better applications out there. AppLovin, I think, you take a look at this one. The valuation on AppLovin, not as crazy. I mean, it's a D, 26. That's not as crazy as Palantir. It doesn't have the market cap and the revenues. So SPY is just one of those. I mean, here's the thing. I said it on Spaces yesterday. You're at all-time highs on SPY. I mean, 571. For me, the target and Raxo. Here is, if you go back to this newsletter, okay, 923, right here, this newsletter at dailystockpick.substack.com. Just go back here and you scroll down. And where does the Wall Street think that we're going to end the year out? Here's the current list. BMO 6100, Evercore 50, and SPY just trades, lop off the last zero. Okay, so the average is around 5,600. 5,600. You're trading right now at 571, which means 5,700 on the S&P. Am I buying at that? No. Am I buying with the MACD this high up? Am I buying with the RSI at 67? No. But if your time frame's 5-6 years, I don't think it matters. It's not going to matter. So, Brian, go back to your AI question. There's Wealthfront. There's Betterment. There's other stuff that's AI based. Those are all AI based, and they have their own brokerage. So you just put your money in there. But as far as AI stuff that connects to your brokerage, trading box specific to certain plats, like one will work on Robinhood but won't work on Webull. One will work on WeScale. Yeah. I think I heard a good discussion on this one. It was a very brief discussion about AI. I think there will be an AI based platform that will give you an average 6 to 8, maybe 10% return a year, and it will constantly trade for you. And there probably are some that are developed right now to do that with options and things. I don't use the bots in Trendspider. I mean, that's kind of my thing. Okay, let's open up some of these. This is Micron earnings. We're going to go over that. We're going to go over Qualcomm, Netflix, Tesla, SMCI. You know what? Let's do SMCI here. Seeking Alpha. Yeah. New home sales data those aren't as important as inflation or the Fed. I mean, for me, here's the thing, Rokun. I'm a long-term investor, so those little types of data don't affect me to the point where I'm getting in and out of certain things. I don't trade options. I do believe that you will make a larger amount of money by just buying and holding. So consider me Tom Lee, the perma bull. But, data like that will affect certain stocks more than it will affect others. But this was an interesting story about Okta and ServiceNow, because I want to get into ServiceNow. Roblox has quietly gone absolutely crazy. This is NVIDIA. Morgan Stanley expects NVIDIA's Blackwell production. We'll talk about NVIDIA and look at the chart on NVIDIA because it has, I'm going to take that. I don't want to show my messages up there. Bulls love the headlines, and, again, he's done selling. Amazon historically has never been cheaper. You just have to know at $200, he's going to sell. We got some MSTU and MSTZ, thanks to Brandon for bringing that up. Leveraged ETFs against MicroStrategy, which has been a much more volatile play than IBIT and the other Bitcoin ETFs. I think it's a great trade. I think those are great to trade. Interesting thought on Costco from Trendspider. Will they split? Freeport and the mining stocks went absolutely nuts yesterday. China stocks were crazy. And then we're going to go to, let's see. I don't know if Seeking Alpha has her photo in there. Carolyn Ellison, I think is her name. Yeah, 24 months. There she is. Okay, we'll put this in. The former CEO of Alameda Research. Douche. I really don't like that woman. I really don't. She knowingly stole money. And then when the feds came in, she said, I'll give you everything you can on Sam. So Google's an interesting one, Lucas. No, Raccoon, don't worry about it. I am going to go into my podcast. But Lucas, here's Google. Google's an interesting one because I heard a discussion about it yesterday about AI, about Microsoft versus Google, who's going to be able to kind of monetize the AI stuff. And what was interesting is 3 of the 5 panelists that I was listening to said while they are using OpenAI, every one of their friends that is not hyped up on AI or an AI expert, they're all using Google Gemini because A, it's free, and B, they all have Gmails and they're already on Google. So, they're not jumping to a different app. I think when Apple starts their Apple Intelligence, that might change. You might see more integration into OpenAI. So I think it's an interesting opportunity for Google because remember, while they announced at launch OpenAI would be the partner, I think that Google's just. I use Gemini more than I use OpenAI. I use Copilot from Microsoft, so my AI searches use OpenAI on that. I haven't started using Perplexity yet, but I've heard really good things about that. I have used Claude to code something that I was working on, but I haven't used a lot of the extracurricular stuff. Now, I did start using napkin.ai, which I need to start incorporating into the newsletter. It's a slide generation tool. It's a really good one. I'm still kind of getting used to it. So, but Google here, you can see right here that 149, it pulled right back there. It literally pulled right back there, and it supported it. So, if you're going to buy at 163, I think you look at that 150 level. 151, 150, wherever you want, as your stop loss. If you're going to trade this, or if you're going to trim this, if you're in at 80 and you want to trim it, I think 150 is the point where you start trimming and you start adding. Okay, so you lock in some profits, and then under 150 you start buying back. I think that's the way I would play Google, Lucas. To be honest with you, I can't imagine that Google's going anywhere. I think they still have the lead. I still think they're smart as F. I think, I think Sundar Pichai he came from the product world. I come from the product world. I think he's got a good sense of what they need to do. I just think Larry and Sergey's in the office, he said, every freaking day playing with AI. And that's the guy I want playing with AI. That's the guy who's probably going to, figure stuff out pretty well. So, let's see. Let me what should we be looking for NVIDIA today after the news yesterday? How is that going to affect the rest of the stock market? Raccoon, here's the thing. NVIDIA there is nothing from an NVIDIA news standpoint that's going to blow this thing up other than a delay in Blackwell. So I've been saying buy it under 120. At 120, it does have some resistance level, but anywhere between 100 and 120, I think you can buy it. Now, we'll go back up to the 130s and 140s. Maybe the valuation supports it. But I would say buy that one for the long term. Don't try and play that one. You can play it. If you're going to play it, do NVDL and NVDS. Do the double leverage ones. Lucas, I am not commenting on that one. Cintas. Let me look at Cintas for Brian. That's the uniform company. I've never been a fan of this one, but I've been wrong. 190 gets you in. And I got to get going on the podcast, but by the way, it's a hold, And how long has it been a hold? Let's see. It's been a hold through this whole time. And the growth seems to be an issue. I don't know why the quant is rating growth as a C. It seems to be okay. Working capital growth is the only problem. I mean, I can't imagine. Let's see where Wall Street says $189 target, and there's 20 analysts. I would agree with them. I mean, the valuation. You're going to pay 49 times earnings for a uniform company. The PEG ratio is 3.25. It's just a little bit expensive for my taste. But I also have never been a fan. So full disclosure, I've never been a fan. I gave up on Square. I sold out. I think $20,000 was my initial investment. I think I sold it for like $6,000. I was at the highs. I do think, see that line up there? We can go into the weekly and you can look. I think that channel has been a good channel to play between 85 and say 52. At 65, you're right in the middle of that one. Your 50 days kind of just hanging on. It's just, how focused is Jack Dorsey on this stuff, and what can they do? It's become a commodity at this point. PayPal is actually doing better. I think in the from a standpoint of short term, and it's because they have hype, and it's because they're so much cheaper. But both have underperformed. Look at the 1 year. Square's up 48%. You look at year to date, though, and Square's down 12%. PayPal's up 27%. So as you pull this one in, PayPal just seems to be doing better. And so I don't know what that says, but I think it's good. Okay. Morning, Marco. Okay, I'm going to start here. We're going to hit QQQ. Okay. Good morning. It is Wednesday, hump day, September 25th. I'm about to get blown. Not in the dirty way, but there's a hurricane coming. I forget the name of it, and it's never good when you get blown and you forget the name, but that's what it is. And speaking of getting blown and forgetting the name, this is a woman that you could probably forget if it was one of those evenings. Carolyn Ellison got sentenced 24 months in prison. I think that's a travesty of justice. This woman deserves so much more. It is also said that Sam Bankman-Fried and Diddy are in the same prison. Imagine the stories that they can tell. Unlike Diddy, though, this is the party, the woman at the parties that Sam Bankman-Fried was throwing. So, I mean, which lifestyle would you want? I'm not saying, listen, I may get canceled over this. Who knows? It is what it is. Let's get back to the markets because I'm no good at commenting on that stuff. But Qs. Okay, we're still in the middle. You still have confirmation. Your Bollinger Bands are cinching up. If I had to guess, I would guess that we move higher. But I go back to this, okay? This is the year-end target for SPY. We don't have a year-end target for the Qs. They're probably out there. But we do look at that for SPY. And so at all-time highs on SPY, with the targets averaging below where we're at today, I would argue, be patient. I would just be patient. There are bullish reasons to be in the market. Again, I'm 90% invested in the market. I'm 5% out. I'm looking to get that 5% back in. But if the market goes up and I'm not in on that 5%, I'm not spanking myself. So, it's just the patience. We're waiting for earnings season. And that's what we're waiting for. But until then, we've got confirmation and you're still in a bull market. When you look at the weekly chart of the Qs, You can clearly see the MACD is semi-resetting. Still not down at the oscillator. You're still 11 to 14 points above the oscillator. Okay? The last time we saw that, we continued to go up. That was back in 2021 on a weekly. Your 50 days still moving up. Your 200 days still moving up. We are in a bull market. Earnings will probably expand, and you'll probably see us continue to go up. Doesn't mean you get out. Doesn't mean you sell everything. It means you just be strategic about stuff. Be happy that maybe your risk tolerance is that 50% is in the market and you're sleeping at night. You still have 50% in the market. If you're down at 20% in the market and 80% is in cash, you're not doing things right. Again, I would turn it over to VOO and chill, or get a financial planner or a financial analyst, somebody that can help you, somebody that's going to guide you in this, because you should be in the market. Again, we are in a bull market until we're not. And that's the key. Look at the pullback. We were still in a bull market because the 50-day is still moving up. The 200-day is still moving up. We're still in a bull market. So these stocks are rallying after China. China announced stimulus yesterday. When the number 2 economy in the world announces stimulus, get ready, because that's has been what's holding up the U.S. a lot. It's been what's holding up oil. You can look at some of the minor stocks. Freeport-McMoRan went nuts yesterday. One in our core portfolio, Cleveland Cliffs, was up like 8%. But again, there's opportunities out there. You can look at a lot of these China stocks. Now, I will warn you, a lot of these China stocks like JD, PDD, Li, XPEV, NEO, even BABA, okay? They are all what I call Caribbean queens, because it is illegal for a non-Chinese citizen to own Chinese stock. So these are paper stocks that are in the Caribbean. If there is some diplomatic issue with the U.S. and China, China could say, you know what? Those paper stocks, they're no good. So how do you invest in China? You can invest in ETFs that are buying the Hong Kong stocks, not the Caribbean stocks. Do your own research. If you don't know what it is, go and call your broker. This is why you have somebody like Fidelity. It's not, you can't call Webull and ask them. They probably don't know. Fidelity would know. So take a look at these stocks. Again, is China investable? In my mind, I think it's tradable. I don't think that you buy and hold something like BABA. But look at BABA. BABA has been a fantastic play in the algorithm. The algorithm over 2 years makes you 43% on BABA. You get in and out 31 times, 31 positions. If you bought and held over 2 years, you're up 13%. Now, when we look at a weekly chart of BABA, you can see it is still below its 200-day. Does it mean you have an option to play? Look at the 50-day. It's still negative. We've exploded. When an economy, this could be the 2020 of China. Because remember how much stimulus was in 2020 for the U.S.? And remember the stock market in the U.S., the world? This could be that play. But there are structural issues in China that might not allow that. Just be aware of that. Now, let's talk about Costco, because they have earnings coming up. This was an interesting theory by Trendspider. A stock split. Are they going to announce a stock split? The stock has run so much. Will they announce a stock split? The weekly chart on here just looks insane. Okay? We talk about this all the time. We talked about the valuation of Costco. For me, it's a little too expensive. A little too expensive. 56 times earnings. When you look at the charting of the, we looked at this yesterday. When you look at, we're going to take that out, but we're going to look at the PE. Okay. We're going to look at the valuation, and we're going to look at the PE of Costco, because historically, look at that 1 year. You've gone from 40 to 50. Okay. You haven't grown your earnings enough to justify. Your price to earnings has just gone up. Okay, they do have growth, but look at the 5-year. You're at an all-time high on 5-year. Look at the 10-year PE. You're at an all-time high. I would urge you, If we pull back after earnings and they announce a stock split, I would urge you wait 3 days and then buy Costco if you want Costco. The other option would just be to buy Walmart or Target. If you go down here and you look at the valuation of PE of Walmart, it's 33. The forward is 29. Target, it's 16 and 14. If you shop at Target, go and buy Target stock. It's just a better option. I don't know that it's going to outperform, but in the quant, Target is a strong buy. So be aware. I think this is still coming up. Hey, here's October is right around the corner for Bitcoin. Remember IBIT with options? Bitcoin. We don't have, for Bitcoin, for the seasonality, look at that. Over the last 11 years, 80% win rate in October. Okay. Average return, 18%. That could be huge. That could be enormous. How do you want to play this? Well, I played it in a few ways. IBIT is the ETF for Bitcoin. I like this one. I think it's one of the largest market caps on the ETF platform. Now, the algorithm over 8 months makes you 10%. I would argue this is one that you just buy and hold. Don't size into this one crazily. There is also 2 new ETFs that are leveraged against MicroStrategy. I have said this before. I think MicroStrategy is a leveraged ETF with Bitcoin. I think this is a leveraged ETF. The algorithm over 24 months makes you 983% versus 651% if you bought and held. You'd be perfectly happy with 651% over 2 freaking years. Okay, MicroStrategy, the algorithm, it has 24 positions. So once per month, 983%. It got you in here at 125 right here on September 10th. You have 2 new leveraged ETF, MSTU and MSTZ. Both are leveraged against MicroStrategy. If you don't know what that is and you don't know, this is trading. These are not buy and hold. Those have huge fees. They also will go up 2 times against MicroStrategy, but IBIT is the buy and hold. MicroStrategy is the trade, the kind of swing trade. MSTU, MSTZ, those are the day trade ones. Okay? That's what you have to worry about. But October, that's huge. Over the last decade, 80% win rate. And it's September 25th right now. Now, this is pretty wild. Amazon charging towards new all-time highs. This is the cheapest the stock has been in years from a PE. We just went over Costco. Let's look at Amazon. It's the cheapest it's been in years. Okay? Quant says it's a hold. If we go to the valuation on this one, it's 41. That is the cheapest it's been in years. Let's go to the chart and let's look at the metrics again. Let's look at the valuation of this one. If we go and we look at PE and we get out the price return and we update this chart, take a look at that, how it's going down. Look at how that is reducing instead of rising like Costco. Okay? The one thing you have to know about Amazon is that from a chart standpoint, when it's at 193 right now. When it gets to 200, Bezos has said he will sell. I have said this before. Anything under this 188, which was resistance, it hasn't held up as support. But anything below that 188 should be a buy for you for long term. Now, am I buying right now? The RSI is at 72. The MACD is what? It's 4 points above the oscillator. It's a little bit crazy and expensive right now. It's high. But if you're looking for like 3-5 years, I don't think it's nuts. Now, NVIDIA, we saw a bunch of insider sales from Jensen Huang. He said he's done. He said he's done selling. He sold $713 million of stock. He said he's done. It's been through that crazy rally that we saw. Now, is NVIDIA done running? I don't think so. Look at NVIDIA. Morgan Stanley expects NVIDIA's Blackwell production could reach 450,000 chips just in Q4, resulting in revenue of more than $10 billion. That's huge. So let's take a look at the chart of NVIDIA. And then we'll go over and we'll look at the valuation, the PE. Take a look at this. I've said this before. I think 100 is your support level. As you get down there, you buy it. It's at 120. That has been a recent resistance level. It's not a long-term resistance level. If we just put a line at 120 and you look right here, it presented itself. We're going to go down to about 120 right there. Presented itself as a few days of resistance right there back in June. Okay, few days of support here in June. And then it had some resistance trying to get back up there in July. It didn't. It lost it. And then when you were here in August, it held it as support. Then it lost it, and it went down to 100. You're using it as resistance now. So do you want to buy it? Let's take a look at the valuation of NVIDIA. Because the PE of NVIDIA, we're going to select metrics, and we're going to go to valuation, and we're going to say PE. And we're going to take out price return, and we're going to look at the valuation. Look, it's going down. So in a market like this, find the PEs and the value play. Costco is not a value play. Doesn't mean that it won't go up. They could announce some crazy stuff. But again, I just gave you some stocks that are trading at their cheapest PE level. And they are high flyers. These are ones that should continue to go up. Look at NVIDIA. Okay, the quant says it's a hold. Why? The valuation. The PE's at 42. Is that crazy? No, we just went over. It has been higher. The PEG ratio, because the growth is so good, is 1.16. We saw that up at 4 for Costco. Now, Wall Street says that NVIDIA's price target is 148. That's 23% from where we are today. The 52-week high, 140. So it's got it in there. It's got it in there. So between the additional revenue and that Jensen's not buying, I think it's bullish. But do I know? No, I'm just giving you some information. Now here, Roblox, quietly, Roblox has gone pretty crazy. Okay, finding acceptance above the all-time high, VWAP, is a step in the right direction for Roblox. Roblox is part of the core portfolio, and I've said this before. And when it's under 40, you buy it. When it's over 40, you sell it. It's gotten over that 44 resistance level that we talked about. Now, when you look at a weekly on this one, it's just at that 44 level. You can see how it's traded up there for a few days and then come back down. I would wait for it to come down. If I just extend this out, remember, I said this is the trading range that we were looking at. If I just extend this out, let me see, how do I do that? There we go. Extend that out there. You can see it's pretty clear. We're going to put that right there. That between 25 and 40, the problem is that as this company becomes more mature, makes more revenues, it could continue to go up. And so I would be looking at about 50 to 54 as the next leg up, where it would put 40 as the support level. Okay, maybe 44 is the support level. But until you get up there, there's no reason to buy this one. No reason to get, some FOMO. So Roblox is in the core portfolio. If you want the core portfolio, you simply go over to Linktree, linktr.ee, and this is free. Okay, it's on Savvy Trader. It's on Savvy Trader. You can look at the core portfolio. It's 35 positions. And you might say, well, why do I want that portfolio? Nobody charges for it. Well, these are names that probably shouldn't get you hurt over a certain amount of time, okay? We can take a look at the core performance against SPY, against the S&P 500. Year to date, SPY is up, 32%. And, the core portfolio is up 33%. So it's doing well. Let me just refresh this real quick because this chart isn't updating with what I want. Let's compare it against SPY. There we go. SPY is up at the end of the year. It is year to date. It's up 20%, and the daily stock pick core portfolio is up 33%. It's 100 shares. This is not a managed portfolio, so it is not optimized. But you can see how 35 names you could. It's $1 million portfolio. Okay, say you just had $100,000. You can buy one share of each. You don't have to buy all of them. You buy 10 shares of the ones you like. There's a lot of stocks in here that are good, okay? There's XLK, there's QQQ, there's Lilly, there's United Healthcare. There's a lot of stocks in here. You can do it total return since I bought it. Look at the losses. You've got Boeing, you've got Tesla, You've got Pepsi. You've got Occidental Petroleum. You've got Cleveland Cliffs. Those are the only negatives. The rest, over about a year and a half, they are all positive. So again, look at that core portfolio, and you don't have to pay to follow it. Now, if you're a subscriber to Trendspider and you signed up through me, right here, this top one, and you have Trendspider is $50 a month. You see my 4-hour algorithm on there. I talked about that with some of those stocks like Tesla that we're going to talk about, like Roblox, like Nvidia, Amazon. All of those are in the 4-hour algorithm. You can do any stock that you want in the 4-hour algorithm. You get it by signing up through Trendspider through my link. You get the core portfolio. It's up here on the right-hand side. It is constantly on my screen. And I don't charge you for this, but the core portfolio are just 35 names that I don't think that you can get hurt trading around or buying. Okay? Simple as that. So find your strategy, find the way you do it. Now, ServiceNow is a stock that I wanted. I own CRM, but ServiceNow is one that I wanted. This was interesting. Okta and ServiceNow may see volatility after the FBI rated Carahsoft from Piper Sandler. Now, ServiceNow is down 2%. Let's take a look at the chart because we're going to go into some chart stuff now. ServiceNow, this one has been on a run ever since it got you in here at 841. It got you in here at 763. Nice 3% gain. Okay. That 841, you're still positive on it. I like this one. I like ServiceNow. When I looked at ServiceNow, we can go back to here. When I looked at ServiceNow and I said, okay, ServiceNow is a software. That's essentially what it is. It's a software platform. And I own, Oracle is in here. Fortinet is in here. There's a bunch of other ones. But ServiceNow, when I looked at it, their biggest competitor, I believe, is Salesforce. And when I selected symbols and I went to CRM, I've owned CRM for, I guess, about 4 or 5 years now, somewhere in that neighborhood. So let's just say 5 years. I should have owned ServiceNow. Salesforce is up 77%. ServiceNow is up 258%. Now, year to date, Salesforce is only up 2%. ServiceNow is up 30%. Is the valuation of ServiceNow good? No. You can take a look at it. 73, 66. Peg ratio down to 2 because they're growing so fast. When you look at peers, CrowdStrike, I want ServiceNow. So we're going to edit symbols. I'm going to take this out, take this out, take that out, take that out, and we're just going to look at CRM. And we're going to say, okay, both of these services. We're going to take a look at this. You can see the charting. You can see that ServiceNow is a strong buy in the Wall Street. CRM is a buy. And you look at the quant ratings right there. And let's go look at the PE, the valuation. 66 for ServiceNow. CRM is 26. The actual market cap, 190 billion for ServiceNow, 258 billion. So Salesforce is double the size of this. The performance, look at the performance. ServiceNow has blown them away. So it's one that I wanted to get into. I saw that one. I said, you know what? Maybe this is an opportunity. Keep an eye on this. Okay. It's got to come back down. It's been a high flyer. It probably will come down to the 840s. At that 840s, that might be a good entry for you. Now, there was an ETF that I saw yesterday, a commodity, sugar. Your boy is addicted to sugar. Why am I not in this ETF? This is the sugar fund. It has gone. The algorithm got you in on September 16th at $11. It's at $13. That's huge for an ETF like this. You take a look at this, and it's been going nuts. Look at how sugar has been going up. This is a weekly chart, and it's below its 200-day, and it's just getting back above there. Interesting. Again, commodities, you can trade all this stuff. So let's talk about SMCI, because SMCI in the quant just went to a buy. I got my email from Seeking Alpha this morning, and it said, hey, one in your core portfolio, SMCI, got upgraded from a hold to a buy. Is this one a buy? I'd argue that that is probably not a buy until Supermicro throws out their 10K. That's what we're waiting for. Remember, there was a short report that said that their finances, they're manipulating their finances and they're fraudulent. This is how it became delisted last time. It's the same playbook. I don't know that it makes sense I don't know the reality of it. I don't know, but I do know Wall Street, their average price target from Wall Street is $750. That's 61% where you're above where you're trading today. The valuation, we talked about PE levels. This PE isn't crazy. The profitability is the issue. Okay, the sector's making 49% gross profit margin. SMCI is down to 14%. That's the issue. You know, their levered free cash flow, they're losing year over year, trailing 12 months, 18%. That's an issue. So the profitability is the issue with this. And part of that is because they're going up against players like Dell, who can slash the prices. Dell is a strong buy. So make your pick which one you want. But information technology hardware, this is Dell. Seagate is the number one from the quant. It's an interesting one. Again, find your opportunities in here. Let's talk about some charts now in Trendspider from the core portfolio, because Tesla is slowly approaching the $260 resistance level. It's $260, the resistance level in Tesla. Okay, while this loads up, I probably have to reload. I'm going to pause it, and I'm going to be right back. I'm going to leave you with some relaxing music. I'll be right back. Let me put on Tesla, because that's what we're going to talk about. There we go. Okay, I'll be right back.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in.
Okay, my apologies. Okay. I'm gonna hit record again. Here's Tesla in the 4-hour algorithm. You can see I had a buy here at 220. That 260 level. How did I come up with that 260 level? Well, when you pull it back here, you can see, I think since July of last year, here on the 4-hour algorithm, it's hit it 4 times. You can see July, June of last year. We can pull back that one. June, it kind of just fluttered around there. Didn't hold that one as a support, but that's resistance 1, where it just hit it. Boom, bounced off it. Support resistance 2 in December, bounced off it, came right back here. Resistance 3 in July, boom, bounce, and even on the bounce back up, this one got to 253, bounced down. So as it approaches that 260 level, you want to make sure that you understand this. Now, if you want to trade it in the 4-hour algorithm, this performs solidly. Over 24 months, Tesla makes you 169% and 23 positions for the last 24 months. If you just bought and held this stock, you're down 15%. This is not one that I would say you buy and hold. The valuation is crazy. We talked about valuation just before with all these. Let's look at Tesla. You do have the Elon Musk hype in this one. Okay, you have robo-taxis coming up. The valuation is nuts. The PE, I talked about not wanting to buy Costco at 50. This is 108. You even look at their PEG ratio, which includes growth. It's at 7. So this is now it's valued as a tech company. It's thrown into consumer discretionary. I would argue it's a tech company. The tech in my car is, I just got actual smart summon. It's ASS is the symbol. I got it last night. I haven't played with it. I am not trusting actual smart summon in a freaking Costco parking lot. But you can go out there and look at this. 3 times the stock reacted to oversold territory on the RSI. It's up. It's up here in overbought territory. And every time it's gotten back up here, it's come back down. So expect this one to come. Now, you might say, well, Wall Street loves this one. Wall Street doesn't love this one. Their average price target, 208. It's 18% below. And there's 47 analysts that cover this. Now, can't get over the profitability. 17% gross profit margin. That's huge for an auto company. Huge for an auto company. So just another core portfolio one that has come up, Netflix. This one is over $700. This one went nuts yesterday, got to $720. We talked about this one a lot. That $700 mark was resistance. Is it support? It hasn't pulled back and shown support yet. I would be taking profits. I never have disconnected my Netflix subscription, but the reality of Netflix is that hold on, I have to get the camera. You guys will sit through this. We're going to get the camera to follow us. Oh, stop. I'm going to get the camera. There we go. The camera's going to follow me now. And now it'll follow me. There we go. Netflix. Yeah, I'm not going to hit pause on that one. And if you're watching the video, you'll get it. But here, Netflix. 680, the algorithm got you in. You made 134% on 25 positions over 24 months. You bake 193 buying and holding. If you take a look at this long-term chart, where's 700 come from? It comes from the November 2021 highs. Okay, we have traveled all the way back up there. You've had some downs in here, but you've traveled all the way back up there. Your 50-day moving positive. Your 200-day moving positive. Your Bollinger Bands have cinched up. If I had to guess, I would guess we're going higher. But let's take a look at the valuation of Netflix. The valuation is a little bit stretched. The valuation is an F in the quant. Okay, the quant says hold. It's 45. The forward is 37. You look at the PEG ratio, which includes growth, and it's 1.3. You got the ad tier. You got them cracking down on passwords. You have a lot of good things happening with this stock. So I don't want you to get out totally. Trim it. At 718, trim it. Don't get out totally. You know, trim it by 10%. As it gets down closer to 700, and we see that support level at 700, because the valuation, while it's a little bit stretched, it's not crazy if they continue to grow. Now, another core portfolio stock that seems to be putting in a nice little bottom here is Qualcomm. This is another chip trading below its 200-day. You're seeing that 165 level is where the algorithm has gotten you in a couple of times. You're trading at 167. Now, you take a look at the weekly on this one, and we're still above that 200-day. You're using that 50-day as support. Bollinger Bands are still super wide. Your resistance level will be 193. You didn't hold that. So it's still going to be resistance. That comes from your 2021 highs. Okay? You had the golden cross. So I wouldn't expect this one to go down too far. But when you look at the valuation of this one, it might be a little bit stretched. The valuation, C. Growth is a D. The growth is the issue on this one. This is how you use Seeking Alpha Premium to look at this stuff. The growth, revenue growth year over year, down negative 3.2%. A chip company that's losing it. They are trying to diversify themselves. That's why they approached Intel and said, hey, we may want to buy you. Look at the valuation. Again, the PEG ratio, it's 1.62. That's not super high. The PE only at 16. So again, you want to take a look at these companies. The core portfolio is out there for you. It is an interesting one. Micron earnings reports after the bell. Earnings will be the semiconductor giant will beat estimates. I found this interesting. I found this super interesting. This bottom line in this article. Now, you can read about Micron, what's expected, blah, blah, blah. There's a lot of issues with this company, including inventories, including profitability. But when you take a look at this is what's interesting. Over the last 2 years, Micron has beaten earnings per share estimates 75% of the time and beaten revenue estimates 63% of the time. What's been the stock reaction? We'll go and take a look at the chart. But this is the earnings surprise. Okay? 8 over the last 2 years, 8 earnings per share beats, 7, only 1 revenue miss. Only 1. When you look at the quant in this one, it's a strong buy. Okay? It's been a strong buy since about 89. It's at 94 right now. When we look at Wall Street, what does Wall Street say it's worth? They say it's worth 147. There's 37 analysts that cover this one. But there are other issues with Micron. It's not like, oh my God, it's so low, it's going to get driven up. No, the algorithm has you in here at 88. Okay, the algorithm over 2 years, 24 months, makes you 85%. Buying and holding makes you 81%. So if you wound up buying up here at 135 and you didn't get out, with the loss, that's because you don't have the algorithm. Get the freaking algorithm. If you bought, here at 111 and you had this nice 19% gain and you held on to it, you didn't have the algorithm. The algorithm can help you. That's why it's there. I don't know what Micron's going to do, but when we look at the weekly on this one, you can clearly see the 200 days at 77. I wouldn't put it past if Micron misses it coming back to 77. It's possible. It's been beaten up. Do I want to hold on to this one? Well, the algorithm got you in at 88 and it hasn't gotten you out. So if you got in at 88, because look at the Bollinger Bands. They cinched up. Look at the 9-day. You have confirmation above that. Okay, the Bollinger Bands are expanding up. My guess, if I had to guess, is we'll continue up. But the RSI is high at 60. You're right at the oscillator. Could it go down? Absolutely. What did it do last time on earnings? You were at, 136 on earnings? You went all the way down to 88. What did it do on the previous earnings? Previous earnings on March 20, you gapped up from 96 all the way to 107. Where are you trading today? 94. 94. Could see a nice little surprise there. So let's talk about scans, because scans, what I do provide you in Trendspider is the ability to find 4-hour entries on 4-hour algorithm entries. I give you all the scans and everything, a watch list, all that stuff. Walmart, okay? This says enter at 69. This is another entry, okay? It just won't say there because it never got you out. Got you in right before earnings, gapped up, and you're at $80 right now. Walmart has another leg up going. Terex Corporation. So this is from the watch list. The Daily Stock Pick watch list that is only in Trendspider. It is compiled between Motley Fool, between Seeking Alpha, and other things that I do. This is a proprietary watch list that I provide to you. There's a ton of names in here, and it's good. Here is one that performs really well in the algorithm. Okay, you make 130% versus if you bought and held 2 years ago, you're up to 63%. The MACD, right on the oscillator. The RSI, no man's land at 51. You're coming up on earnings. It got you in here at 51. You're at 53. You got a juicy little gap up here at 57. Terex Corporation. Again, you can do all of this with the newsletter, which is free, and Trendspider. This is ARM Holdings. It got you in here at 129. It's another leg up. You're positive on the 9-day. You're trading between this 174 and 99. It's trading at 145 right now. Would have been nice to get in at that 129. But again, the algorithm makes you 213% versus 154%. This has only been out for 12 months. So if you bought and held this, you made 154%. If you use the algorithm to trade in and out in 12 months, it's 10 positions. You win 5 times. But your average win is 37%. Okay, Adobe, which is probably, I saw Jim Lebenthal yesterday. He bought a bunch of Adobe. Adobe is probably one of the few that's going to monetize AI. 526.53.23. Now, you make 41% on this. If you bought and held, you made 78% over 24 months. Do you want to buy and hold? For me, I'm not an Adobe subscriber. I don't use the service. I like Adobe. I'm fine making 41%. Do I need to make 78%? No, but I want to find out how to sleep at night and make 41% over 24 months. CTSH. I think this is from the NASDAQ. Cognizant. Okay, 76.47. This one doesn't perform as well in the algorithm. But if you're interested in Cognizant, then you can get this one. You know, one that does trade within a range. I was just going over this one. Electronic Arts. Electronic Arts, it makes you 9% in the algorithm. It makes you 17% if you buy and held. Now, look at how low that MACD is down there. The last time the MACD was down here, you were at 127. You ran all the way up to 150. Okay, you're at 141 right now, the buy-in, right before their earnings. Their earnings are coming up. The RSI down at 42. If we take a look at a weekly chart on this one, look at that range. Okay, you're at the top of that range. Is this going to be a multi-year breakout? Or is this just going to pull you all the way back to 125? I don't know. I don't know enough about EA. I don't know enough about the fundamentals. If you want to know about the fundamentals of EA, go over to Linktree, linktr.ee/dailystockpick. Click on that second link. That second link is Seeking Alpha Premium. You get a free 7-day trial. Go and look up EA. Okay, that's how you use these tools. The last chance to secure a rate, October 1st, the rate goes up. But it is. You can lock in your price increases to $2.99. I don't know what it is before that. I think it's like $2 something. But I save you $25 off. You get a free 7-day trial. Again, the quant rating is beats the market. Now, say you don't want to do any of this stuff, and for some reason you're listening to this podcast, but you just want to be hand-fed a portfolio. That's where Alpha Picks comes in. Yes, you can follow the core portfolio. You can do what you need to do by just trading these names, and most likely you can keep ahead of QQQ and stuff. But if you just want a proven portfolio, Alpha Picks. It's the third link on Linktree. Alpha Picks right here. How do I know it's good? Look at the performance. It's just performance based. 114% versus the S&P at 38%. It's two stocks, one on the 1st, one on the 15th. They alert you when to sell. That's the difference. Motley Fool is a junk portfolio. They have stocks in there that they've held on to since 2000. Of course, you're going to show huge growth. And of course, you know, if you pick the right stocks, you're going to beat the S&P. It wasn't that hard. I did it with Apple. I did it with Microsoft. I did it with Amazon. I did it with Netflix. I did it with Tesla. So all of those stocks, they're in the Motley Fool portfolio. It's nothing great. This, I can tell you, the last like 5 or 6 picks, I didn't even know what they were. I had no clue what they were. Now, if you want, you can go to Monday's podcast right here and newsletter, and I go over 2 of the picks on Mondays. And the newsletter's free. By the way, if you're not subscribed to the newsletter, it's dailystockpick.substack.com. It is free. The weekend, I do video courses on educational stuff, on how to trade, some of the technicals on the charts that I use, things of that sort, some stocks that I'm looking at. But yeah, it's free. So go and pick it up. Again, you know, if you want anything and you want to support the podcast, it's all on Linktree, linktr.ee/dailystockpick. If you want, you know, Earnings Hub has more stuff on Micron. I love Earnings Hub. If you have any questions, you can hit me up on the email here. I will talk to you guys tomorrow. Thanks. Take care. Bye. Okay. The prep. Troy. I think I went over it in how much prep I do. And it changes day to day. Like today, I probably don't have a ton of prep. I didn't do a ton, but there's a video. Where is it? How much money I make? Let me see. It's not there. Videos. It is. I'm flashing money. Let's see. Videos. I know I flashed money. There we go. How much money I make. You can go and watch this. I'll copy it and paste it in there. The prep is usually, I will tell you, it's usually anywhere between 2 hours and 6 hours, the prep. I don't practice. Here's the whole workflow. I'll tell you the whole workflow. The workflow is I go to Seeking Alpha and I say, okay, about 2 or 3 times a day, I'll say, okay, what are people reading in trending news? And I'll see it and I'll look. I'll also watch CNBC and I'll see what kind of what pops up. The ticker is always kind of my number one because I don't care too much about what they're saying. But sometimes if like Josh Brown or Stephanie Link or somebody that I like is on, Leon Cooperman was on this morning. I love that dude. Like him. He said, hey, the stock market, he's the guy that taught me about the Nifty 50 in the 70s. And how it was overvalued. He just said, hey, nothing's overvalued. There's a lot of good stuff out there to buy. He just doesn't have any cash to buy. So he's buying. And I want to get into buying too. I'm 90% invested. I just, I need to put that in. So I don't practice. I do more research than anything. But I will tell you, the charts that I look at, and you will notice this clearly if you kind of pay attention. I don't look at a lot of charts beforehand. I rely on Trendspider to send me everything that I need. And it's because I have it set up so well. And that part of the issue is you have to have your, how do I put this? When I had a 9-to-5 job, if I had days where I was in meetings all day, I wanted information sent to me. And so I set up my system so that I would have information sent to me. With Trendspider, I get alerts. So right behind my head, there's a list of alerts here that I have on stocks that I'm looking to trade. And I'll get alerts on buys. I'll get alerts on sells. I set it up with my portfolio. It does take time. But I was doing this all on my own anyway. And so I just decided to start a podcast because I had some type of success. I do keep things moving. If you go and you listen to the first few podcasts and things of that sort, it comes with practice. But there's a lot of times where I'll bring up a stock. I'll try and make a point and I'll just bring up a stock just off the top of my head. And I'll look at it and I'll say, oh shit, I'm completely wrong. But you wouldn't know that I'm wrong unless you're paying attention. So Troy, it's more about making sure that I'm giving good information, because I don't think I mislead people. I won't make a mistake where I'm like, oh shit, that's that's not right, or this is what you're seeing on the screen isn't right. The fact is, what's on the screen is on the screen. If I'm talking about something and it just kind of goes against me, if it's wrong, if I'm completely wrong, I'm humble enough to know that I'm wrong. But I don't practice. So, but that money video does have a lot of the prep. The prep is I go, again, I kind of got off topic. So I go to Seeking Alpha, I look at that, I watch CNBC, I do look at charts, I use FinViz still. I still use FinViz on a daily basis because it's free. I have a burner Google account that I set up just for finance. And so I'll go and search Google every now and then for some topics. But I put it all into Apple Notes. And so on my screen, I have Apple Notes. I have my camera over here. I have the web pages up here. And then I have OBS over to the right. OBS is the software that I use to broadcast and to record. It records and broadcasts at the same time, so it's good. But it's just, I have my iPad Pro down here, which I watch for some of your comments and stuff that don't come through on OBS. And I can see my screen better because I'm a live viewer. I have a burner account that I'm logged into on YouTube down here too. So, but yeah. ChatGPT, Scott. Yeah, I think ChatGPT, Gemini is more restricted than ChatGPT is at the current time. Unless you ChatGPT, I think, and that's why I use Copilot, because I get free access to ChatGPT 4. The app on Copilot is just Copilot. I'll show you. There's the Copilot app on my phone, and you get free access to ChatGPT 4. There's just and this is from Microsoft and it's free, and you can put in there. Let's see, where is it? There we go. See that little toggle? You toggle that and you get free access to ChatGPT 4, which is normally like $20 a month, but it's only on mobile. So if you want to use ChatGPT on your computer, you have to pay the $20 a month. But I'll use the computer, Gemini. I'll use the iPhone for ChatGPT 4. So what are your thoughts on the pullback coming or just in before big tech starts the earnings cycle? Lucas, the only thing that I can tell you, my thought is, again, I'm 5% out of the market, but I'm 90% in the market. If you were to ask me to flip a coin and tell you, are we going up or are we going down? The only guidance that I ever use for that are the charts. And the charts right now, you have confirmation on that 9-day. Your Bollinger Bands have cinched up. I think you're trading between this 450 and 500, but you're only at 486. So I would argue the move is up. As we get more into these upcoming weeks, again, you're on this week. Do we have lower weeks coming up, seasonal weeks? No. That's the problem with QQQ, something like that. Now, I'll tell you, QQQ, if you go and look at it, against SPY, or we'll do SPY. Yeah, we'll chart it against SPY. Select symbols. We'll do SPY. We'll do DIA. Okay, those are the three kind of ones that you want to look at, and you look at year to date. Okay, these three are the major indexes, and you can see QQQ is up 18%. SPY's up 20%. Dow Jones is only up 11%. So you may have some more room to actually catch up to SPY with QQQ and DIA, which is the Dow Jones. So if I had to guess and you had a gun to my head, I'd say we're going up. But again, that's just a guess. That's why I'm 90% in the market. The 5%, I pulled out here in August, probably around this time, around the August 9th, August 10th, somewhere in that neighborhood. It might have been 15th or so. I forget when. But I pulled a bunch out. I got rid of my losers, and I've got a bunch of cash sitting. Now, those losers are up. So I didn't do great. But, yeah, that's that. Morning, Brandon. Hey, Marco. Okay, it is 9:58. I'll do an index portfolio check. This is my personal portfolio, and I check it in fidelity against the indexes. So Qs are up 0.24. I am down 0.09. And more than likely, let me look, Apple is down. Yep. Apple's down 0.35. Apple rules my portfolio. Do I expect Apple to go up here from 226? No. There was a report that China is, that foreign phones in China are lagging behind Huawei. I mean, that's as clear as day that 228. And we talked about valuation. I mean, I'm holding Apple. I'm not selling Apple, but I'm holding it. The valuation is nuts. The valuation is actually 35 times earnings. And you look at the historical. We're going to get rid of the S&P, and we're going to go select metrics, and we're going to go valuation, PE, trailing 12 months. Select metrics. We're not going to do price return. So let's look at 3-year. I mean, the PE is as high as it's ever been. 5-year. Here in 2020, it was higher. 12, 24, 2020. It was higher. It was at 39. So it doesn't mean that it can't go up. But at 34, it's a little bit tough. Again, my kind of way of doing things, it may not be normal. It might not be suggested, but it's provided success. The algorithm in Apple makes you 29.7%. If you buy and hold, it makes you 52%. In my mind, I'm a buy and hold guy with Apple. So I'll look to the 4-hour algorithm to actually get me into spaces. But again, if you can't sleep at night and Apple's causing you agita and you wake up in the middle of the night and you're nervous, use the 4-hour algorithm. Again, 29% over 2 years, it's nothing to sneeze at. Doesn't mean that past performance is going to, predict future performance, but you got the 200-day moving positive, you have 50-day moving positive. If I were to actually want to buy a ton more Apple, I would wait for it to hit that 200-day. And right now that's at 196. If we go down 226 to 200 again, look at this one. That candle right there. The open was 199. Okay, the low was 196. 196 you could have gotten it at. And that was just, less than a month ago? August 5th? Well, maybe 2 months ago. Because we're at 1 month ago would be August 25th. So almost 2 months ago. But the RSI was super high. The MACD was super high. You didn't know it was going to bounce back like that. So, okay, 10:01. I'm out of here. You guys have a great day. I will talk to you tomorrow. See ya.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now.